Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius and Anucauskas. Today is the 18th of December 2018, so welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a look at the markets, a few charts, the usual stuff. But before we start looking at that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay guys, so now then let's start jumping into the charts. Now the first one I want to touch on here is Nikkei. Now I was talking about this index last week, and basically I was telling you guys to keep a close eye on this little in a way a bit of a flattish upwards moving channel here. That's almost like a range, to be honest, but still there is a bit of an angle here. So currently you can see that the index kind of closed today just near this lower bound of the rising channel. So this of course makes us a little bit cautious. I mean, it tried to push the index, tried to push here towards the 21,875 level, but I mean it managed to reach that, but from there you can see that the bear kind of took control and pushed it back down. So the big question here is, are we actually gonna see a nice break here which could lead to further declines, or actually this is gonna hold and we're going to aim for higher levels? Of course, it really depends as well how today's US markets are going to open, how they're going to trade and finish the day. But for now, as long as it remains intact, we will continue aiming for higher levels. Certainly, again, we'll aim for the same 21,875 level. So in a way, like I said, for now, be very careful, even if we're going to get a nice undershoot here, and we're going to see a break below this lower bound of the rising channel here. Still, for us to get comfortable with much lower levels, we would need to see a nice good drop here below the 20,970 zone, approximately there, which was marked here near the lows of the 26th of October. So this could be this break here could be our gateway towards much lower levels, and this is where we could then target the lows near the 20,345 level, which was near the lows of the 26th of March here, the same year, of course. But for now we're gonna stay put, keep on monitoring this one. If this reverses back up here, we do have an interesting level, which is here near the 21,280 zone, approximately there. Or in a way, let me just zoom in this a little bit. We could in a way lift it a little bit here for those who are short, slightly, let's say, slightly less impatient, slightly more impatient, let's put it that way. So you could in a way keep your eyes on the 21,340 level. A nice good pop above this could potentially lead towards the highs here and towards this level right here, the 21,875 that I was talking about. And if this time it doesn't hold the price down, then further acceleration of the price could be possible here, and we could then target the 22,240 level, which was near the lows of the 29th of November, and also marked here near the highs of the 28th of November. So quite an interesting level this one is. And of course, if the bulls kind of continue dictating the rules here, we could see this one traveling all the way here, maybe towards the upper bound here of this, in a way, kind of a bit of a flattish rising channel formation. So for now, long story short, guys, keep on monitoring. Even if we're going to get a break here below this lower bound of this rising channel, still be careful. We need to see a good close here below on the daily candle below the 20,970 level, approximately there, and in order to kind of consider further declines. But until it happens, we'll just stick to the upside for now, at least going back here towards the 21,875. Looking at gold. Now gold, looking at this 4-hour chart, I was talking about this one last week basically, and I was telling you guys to keep a close eye on these two lines here. So this very short-term downside resistance line taken from the high of the 9th of December, and this upside support line taken from the lows around the 14th of November, or in other words, the mid-November. So you can see that gold managed to push higher here, managed to break this downside resistance line, and currently is kind of stuck here slightly below the 1251 level. Now this level here acted as a very good resistance back on the 9th of December. So in a way, this could be our level here to watch, because if we get a nice pop here above the 1251, this of course could confirm a forthcoming higher high here, and yep, we could see this one traveling further up here. Now we do have the 1266 level as the next potential area of resistance, and just to kind of show you what that level was here way back here in July this year. So basically the highest point of July, where the price got held here, and from which it declined lower here, where it managed to reach almost not almost, but actually managed to reach the 1160 level. So right now, that's why this level here, the 1266, is going to be heavily monitored if we are going to get a nice pop here above the 1251 level. So be very cautious, be very careful. Even if, let's say, we could see a bit of retracement back down here, as long as it remains above this this downside resistance line here, as long as it remains above that, then we're still going to look at this one as from the bullish side, and we're going to aim for higher levels again. So yep, for now, guys, looking at this picture, it seems to be more bullish than bearish, and for us to consider at least some further declines here, or not further declines, but in general just some declines here, we would probably need to see a nice good drop here below the 1233 level, marked here by the lows of the 14th of December, and then we'll aim for levels like the 1230, slightly below that, and the 1220 zone approximately there. So it also acted as a very good area of support here back in the end of November. But again, for now, judging from this picture we're seeing here on the 4-hour chart, it seems more bullish than bearish. Jumping into NZDUSD now, this one is had a nice pop here overnight during the Asian morning. So basically we managed to push higher here. There was some data coming out about business confidence in New Zealand, so we had a good reading here, or should I say New Zealand had a good reading, and the curve kind of went higher, and now this of course got reflected, and the investors and NZD investors picked up on that quickly and managed to drive this pair higher, but found its resistance near the 0.6880 level. So last time this area was tested around the 13th of December. Now from the very short-term perspective, you could in a way start looking at something like this. So basically we managed to break this little tentative, in a way, short-term downside resistance line taken from the peak of the 4th of December. So, and you can see that today already it managed to retrace a little bit, where it kind of failed to drop below this line. So it tested it from above. So in a way, this still kind of looks a bit more to the bullish side, and we could see maybe this one traveling back up again. But for us now to consider higher levels, we would need to see a nice good pop here above the 0.6880 level, and only then we'll aim for levels like the 0.6910, or even actually going all the way here towards these highs. Let me just quickly mark that, these highs of the beginning of December, or to be more specific, the 4th of December, which was around the 0.6970 level. And but again, like I said, for us to see that level, we need to get a nice good pop initially above the 0.6880, and then a clearance of the 0.6910 level, which was marked here by the highs of the 11th of December. So some quite interesting levels here on the upside, but only if we continue seeing this this downside resistance line kind of holding the rate here from dropping lower. So yep, if we see this reversal here back to the upside, then yep, keep your eyes on the 0.6880. On the downside, if this suddenly starts dropping and we see a close of the daily candle below this downside resistance line, now certainly this could be a bit of a worry signal for the bulls, because we could see maybe a bit of a decline here, maybe a bit more retracement to the downside. The only thing is you could kind of keep an eye on this little if this one was a tentative one, this one is a very tentative one, but nevertheless something that probably could stall the rate initially just for a while, until kind of the bulls and the bears could figure out, you know, what to do further. But if that doesn't hold, I mean, and also we get a nice drop here below the 0.6818 level, approximately there, then yep, we could then consider a further decline here to the downside, where we could then aim for the lows of the 14th of December, which were around the 0.6775 area. So keep your eyes on that one. But again, for now, coming back to the initial idea here, for now it seems to be more bullish than bearish, but be very careful with this little downside resistance line. If we see a close of the daily candle below it, well, then probably we're just gonna stay put here and see what it wants to do, if it wants to travel further down here, or actually does it want to reverse and go back up again. So and the 0.6880 will be our breaking point here for seeing higher levels. GBPNZD, that leads me to GBPNZD. So this one, even though overall it's kind of still looking quite positive, I would say, because it's still kind of trading above this this downside resistance line that it broke on the 13th of December. So still kind of, we're going to aim for higher levels, but this time probably to be more on the safe side, we're going to wait until this kind of gets closer towards these 1.8640 level, and then we'll consider, if it starts breaking this level, then yep, we could target higher levels like the or initially I would say we will target the 200 EMA, of course, here on the 4-hour chart, but the better area of resistance, potential resistance, could be seen around the 189.85 area, approximately there, which was marked here by the highs of the 25th of November. But again, I'll repeat myself, for these higher levels we need to see a nice good move here higher. Certainly it's quite a big one. For those who are more on the impatient side, you could in a way keep a close eye on this little area here around the 184.85 level. Certainly a good move higher here could potentially open, a good move above this level could open the path toward these higher levels, but you should have probably a very careful stop here, because if this, let's say, fails to drive above the 1.8565 area, approximately there near these highs, then yep, we could see maybe a reversal back down here again to test this downside resistance line from above initially, and then we'll take it from there. So for now, long story short, 1.8640, our cautious breaking point here, where we can then potentially aim for higher levels. But if this suddenly drives back below the downside resistance line and closes the daily candle below this line, then, well, I mean, probably the upside could be slightly off the table. Jumping into GBPUSD, this one is well, it tried to push here higher, and at one point here it managed to break this, not only the 1.2660 level, but also managed to break this downside resistance line here that has been running here for quite a while. Let me just kind of slightly adjust the levels here a little bit to be more accurate, and this was running here from the highs of the 7th of November, and or in other words the highest point of November basically. So it managed to break it to the upside, but you can see now the bears kind of drove it back quickly down, and currently this pair is stuck near the 1.2660 level. Let's see how that performs today. At the moment we're still very cautious. Probably we're more on the neutral side here, because for us to consider higher levels we need to see that daily candle closing above this downside resistance line, and then we'll potentially aim for higher levels. And for the downside, for us to, from the very short-term perspective, and looking at this 4-hour chart, you could in a way monitor this area here, this potential area of support around the 126.10 zone. So a nice good drop below this could open the path towards the 125.30 level, marked here by the lows of the 14th of December. But if that doesn't hold, further declines could be possible. But for now, be very careful with this one. Certainly, it had a nice run today, during the European morning, the European day, and still kind of is not all is lost for the bulls still. So we're still kind of hanging around this 126.60 level. So let's see if they manage to push it higher here and close the day above this downside resistance line. If so, then yep, we could then aim for much higher levels. And the last pair I wanted to quickly touch on, probably not going to spend too much time on it, and this is the EURAUD. Looking at the short-term picture here, it's currently testing the 1.5825 area, maybe just slightly above that, but of course this could be a good positive indication that this pair wants to continue traveling higher. We could in a way see a test of this high here of the 9th of December, which was near the 1.5885. But to be honest, if you want to see longer, well, if you want to see this one moving higher in the longer term, then or at least in the near term, we would need to see a nice good pop above the 158.85 zone first, and then we'll consider higher levels like the 159.50, or even actually going all the way up here towards the psychological 160 and above. But for now, be very careful with this. It's a bit of a tricky pair. If we get a nice move here, continuation move here above the 158.25, then yep, consider the next potential area of resistance near the 158.85, and we need to see a nice good pop above this level in order to kind of aim for much higher levels in the near term. On the downside, if this starts moving back down here and drops below the 157.25 area, marked here near the lows of the 14th of December, be very careful, be very cautious. This could drag it lower towards the 156.68 area, approximately there, marked here by these lows of the 11th of December and the 13th of December. But for those who are more for those bearish, more cautious bears, let's put it that way, you might as well hold it and wait until we get a nice close here on daily candle below this level here, below the 156.68 area, and because then we could aim for much lower levels, levels like the 155.90, or even actually going further down towards the 155.20, or even the 155 level itself. So for now, it's a very interesting pair, but again, like I said, be very careful with it. It might give you a few surprises later on. So yep, for now guys, I hope you found it useful, and I hope you're gonna join me tomorrow morning at my Traders Espresso, and that's 7 o'clock GMT time. So yep, but for now, I hope you have a fantastic trading day. For those who are still trading, for those who are finished for today, have a nice evening. Bye bye guys.